Good morning. It's Market Day Report. Welcome to another trading week. All right, let's jump into overnight trade action. We'll start with the corn market, half penny lower, 422 on the Ds, while the other contracts mostly higher to start the session. What about soybeans? Well, soybeans in the overnight session moving higher. Wheat market in Chicago in the red. Kansas City, also in the red, got choked up over wheat here. And how about cotton? Well, cotton is higher. Brian Hoops, maybe you can help me here. I got all choked up over wheat in the red. Help me out here.
Good morning, Tony. Yeah, we come out of this weekend here and not a lot of news. President Trump has been talking about maybe reaching an agreement with China, and that has the soybean market moving higher. So that's potentially one thing that the trade is watching the next couple of weeks is that we're actually higher in price than we were a year ago without China being in the market and buying. So if they would reach an agreement that China comes into this market, we could see prices really move explosively higher. And so you actually have the funds estimated now to be net long. There are about 19,000 contracts net long in soybeans, one of the few commodity markets that are actually holding a net long position in. Certainly not corn, not wheat. It is in bean oil and soybeans. So we're seeing some buying interest come into the soy complex because of that. President Trump also reiterated over the weekend things were not good with Colombia as far as drug trafficking. He's very upset with them and threatening to put some pulling funding away from Colombia, putting tariffs against them. They actually are our third largest U.S. corn customer. And so that could potentially hurt some corn exports as well. If we do put some tariffs there, that may limit the upside for the corn. Of course, we will not have a crop progress number this afternoon, but the Bloomberg and some of these other news wires are conducting a survey of analysts, kind of giving an estimate of what we think this harvest pace should be at. And I think we're still at this really much a normal pace, nearly 70% or so of the soybeans harvested, corn over 50%, 55% maybe. That tells us that maybe the seasonal lows are actually in place in this market, and we're going to see some sort of recovery as the market has a post-harvest rally over the next several weeks.
Yeah, I'm glad you mentioned, by the way, the issue with Colombia. That Colombian president, fairly new. I mean, he's been in office less than a year and a half. But Colombia, a vital trading partner when it comes to corn, backing up now in trade in general. Brian, any final thoughts here before we go to break?
Well, other than, reaching an agreement with China, it's hard to imagine to be real bullish soybeans right now. They're planting corn and soybeans in Argentina and Brazil. They had rain over this weekend. It looks nearly ideal as far as growing conditions there, and they are expanding acreage. So upside is probably limited unless we get that agreement with China. And if we can get that agreement, we could have, a dollar rally of soybeans. But again, producers should be looking at selling that rally. In fact, if we get one, or at least hedging it because of the other negative fundamentals.
All right, Brian, hang on just a moment. We'll take a quick break, be back in a moment. More Market Day Report after this. Let's talk cattle for a moment. We'll start with cash cattle in the South, 240. And I got to looking back because saw where we were 5 to 6 higher. And then I remembered, wait a second, we didn't trade any in the South last week or the week before that. So the trade that we did have on Friday, yeah, it was 5 to 6 higher at 240. In the North, 240 to 241. And here's live cattle futures. We backed that up $3.45 on the October as it's set to expire in, 2 weeks? Wait, a little over a week now. 240.50, while the most active December traded 242, settling 587 lower. Now look what happened to the feeders on Friday. Bottom fell out, and we saw locked limit lower, which means once you hit that $9.25 loss, can't go any lower. Trade basically stops at 371.70 on the November. January, March, April, all pretty much locked down at that limit. We'll have expanded limits. Brian Hoops will help us out with that in a moment. February hogs off 32. As you look to the 2026 contracts, mixed territory, but most active December also lower, down 25, 82.35. Brian Hoops, Midwest Market Solutions. So that limit that we have in place for trade is really a cushion, well, maybe not a cushion, more like a brick wall, if you will, that keeps us from flooding over, but we expand those limits today, don't we?
So they will be expanded more than what they were on Friday. We should not test those limits whatsoever. In fact, I don't even know if we're going to open lower. I think we're probably going to see some sort of recovery this morning. Sometimes you get all kinds of momentum like we saw on Friday and just kind of builds and builds to where you see that lock limit trade. But the pools were not real heavy when we closed the board on Friday afternoon. So there wasn't much in the way of actual selling, additional selling coming into the market. There isn't much showing up early this morning, so we may just see more of a steady, maybe even a higher choppy type trade to start off this morning. But cash trade was stronger last week. I've heard some rumors we may actually have a cattle on feed report this Friday. They are gathering, newswires are gathering estimates for it in case that it will be published. Heard also that CPI will be out this Friday as well as cold storage. So we are checking into that to see if these reports will actually be issued with the government shutdown. Other news on the cattle, just there isn't that much over the weekend in here. We went down sharply on Friday because of comments President Trump had made about the U.S. buying beef. And it looks like, according to his comments over the weekend, that country is going to be Argentina, which is one of the rumors that had been kind of floating around. It was either Brazil or Argentina, with most likely it to be Argentina because of the money that we had poured into their country to kind of salvage their economy. It looks like we're getting something in return in the form of buying U.S. beef.
All right. So, Brian, before we go, Halloween costume. What was your favorite Halloween costume growing up?
Gosh, I don't know. I guess I couldn't even pick one, Tony. What about yours?
Well, for some reason, I thought a football player would work year after year after year after year after year, and I just kept wearing the same one. And I mention that only because the economy has hit a place where 1 in 5 Americans say right now they're skipping Halloween because of the tight conditions. I may dress up like a steak, though. I'm thinking about that this year. Brian Hoops is with Midwest Market Solutions.